Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It's just gone 12:30 PM on Friday the 19th of February 2021 and we're going to spend the next few minutes looking at gold. Now, it's been a little while since I last looked at gold. If you remember, I did a bearish count and a bullish count looking at them. Well, prices continue to reveal itself to me as time's gone by, and I feel much more confident now presenting this bullish case at the moment. I'm not saying the bearish case isn't possible. I'm just saying the count I had on the bullish case had me all a bit confused, to be absolutely honest. And sometimes the best thing you can do is take a break from something, come back, look at it with fresh eyes, and that's what I've been doing the last few days. And I've reconstructed the count during this big correction we've been going through in gold, and I'm much happier with how it's constructed now. So I want to present that to you in this video. But before we do that, we're going to do as we always do on this channel. We're going to start with our basic technical analysis first and our Elliott wave count and analysis second. So first thing we want to do is clear the chart for count. Now, if you're new to the channel, let's have a quick rundown of the chart. What you can see, we have 4 exponential moving averages on the chart. This is the yellow in 10, the 20 is blue, the 60 is the orange line here, and the 250 is the green. We also have a fifth moving average, I should say, but this is not an exponential moving average. This is a 200 simple moving average. So 4 exponentials and 1 simple on the gold chart. We have a volume profile on the right hand side, which is a visible range and therefore adjusts when we adjust the chart. We have a built-in point of control, which is the yellow dashed line, showing us the greatest area of volume in the profile. And then we have a RSI set to a 10 close, with the green 30 level representing oversold and the red 70 level representing overbought. We also have a MACD with a 10 for the short term moving average, 20 for the long, and a 9 to smooth. Right then, what can we see? Well, we're here on the weekly chart at the moment. We've had quite a bearish week this week with gold. We are having made several attempts the last few weeks to break above the 10 and the 20-day exponential moving averages. They have both rolled over, with the 10 now starting to accelerate away from the 20. We are below both at the moment, having come down to test the orange line here. The 60, we are in the process of testing it right now. Actually, we've wicked through it slightly, but price is just hovering above it, and this is currently providing some technical support. RSI in the weekly time frame is not oversold yet. We have yet to set a lower low in the RSI, or I think we just have set a lower low in the RSI, but not quite, and just set one in price. So there's no divergence here yet, positive or negative. RSI is just trending with the price, and the same is very much true with the MACD here. Another darker red bar on the histogram as the short-term average rolls away from a longer-term average again. This is looking overall relatively bearish, because we've had these moving averages cross over, we're below them. However, you'll come to see that when we come to look at the Elliott wave count, that's telling a slightly different story, which puts a more positive tint on things. And this is why it's important to have both forms of analysis, because we need to have a broad opinion of the asset and we need to have a more focused opinion of it as well. So let's come down to the daily time frame and see how it looks here. Now, things are looking really kind of grim at the moment on the daily time frame using basic analysis. I mean, we are now oversold. Now, we've seen here with the pivot back in 30th of November from this low swing low to this high here, we had a oversold reading similar to this oversold reading with this swing here, and we've just reached oversold territory and the RSI seems to be flattening. So this suggests to me that we are about to get a bounce. Now, it could be another temporary bounce before we roll over again, head lower, or this could be the end of what I've got as a WXY correction, which we'll cover in more detail shortly. So I'm leaning into potentially buying this with a relatively tight stop below it, because I think we've done a lot of sideways correcting here. I think my gut might be wrong, but my gut tells me that if we were going to have broken down violently, purposefully from the top in the bearish count, we would have done it more convincingly than this constant sideways up and down movement, which just feels more corrective to me overall. But there is no denying that we are continue to record red bars in the histogram. The shorter-term moving average is expanding from the longer-term moving average, and we are now below the 250-day exponential moving average, which you can see we tested here to the tick on the 30th of November. We're below the 200, the 10, the 20, and the 60. They're depth crossing over the simple and close to depth crossing over the 250. So, from a fundamental or basic technical analysis point here, we are looking very grim. And if things were to continue along this path, things could look like they could collapse quite precipitously, or we are balancing quite precipitously at the moment, I should say, on this ledge, and could collapse quite quickly. So, having said all of that about the technical and basic technical analysis, let's now go and contradict all of it by introducing the new count for my Elliott wave count, which I've been working on here. So, why is it a contradiction? Well, let me explain why. So, I think we are working on. That's what I feel this looks like, and I don't think it's a very amazing or impressive guess to say so, or suggestion. I think it looks pretty obvious. Let's just check that for a minute. I think it looks pretty obvious to most looking at it that it likely is some kind of double combination. That's how it counts for me. So if we just bring up the wave so you can see here, I'm basically saying WXY. So we have an A, B, C, 5, 3, 5 zigzag with a triangle in the B wave for our W. We have this A, B, C, another zigzag into the X, and now we get this expanding pattern, right? This A bring us below this low, B bring us back to this high, C expecting us to bring us back below this low. So we get a big A, B, C here in the Y. So a double combination. Now I've got a target down here. This is my target for Y. This is at 1735 spot 24. I also have a couple of other prices on the chart. I have my confidence above this level line, which is at 1963 spot 93. This is essentially the pivot of the X here. This swing high on the X. If we get above that, I'd be very bullish and expect us to continue higher. We also have an invalidation point down here at 1689 spot 76. This is for the primary wave 1, which we're getting close to transgressing. So I do have a different count which puts the primary 1 lower, but this is a count I'm working with at the moment. I may have to go back and look at the way we've gotten up here, but I've spent so much time focused now on the correction itself that this is the part I think is essential we get right. How do I get this target for Y? Well, all I'm doing, same way we would just using like a flat correction or a zigzag, is we're just taking the length of the length of the W, sorry, and projecting it from the X. And that brings us to 100% parity at 1731 spot 09. I've got it at 1735 here. I think that's because the price label, I've moved the price label by accident at some point, but in this region, that's why I've got a target box down here around 1730. This would be parity Y with the W. So for me, at this moment, we're right at this low. We've just transgressed below it. So we've taken out this pivot. We've taken out this swing low here. We are heading lower, and I think we've probably got one more move down, 5 waves down in a C of the Y of the 4, to finish off this double correction. Now we could come deeper. We could push to the 123.6 extension of the W for the Y for the W. So we could work our way down to anywhere before this white line, before 1689 spot 30, which is our invalidation point. So we could come down to here and then bounce. Now if we were to come down any lower, then one of two things has happened. Either this is incorrect, or my count up to this point is incorrect, and I need to reconsider the position of the 1 if I was to remain bullish. But we're oversold. We've seen that gold on the daily time frame has bounced from these oversolds during this correction before. We saw it here with our RSI reading of 22. We saw it here on the W pivot here with an RSI reading of 26, and we're currently reading 27-ish. It's a high 26s, low 27s we're reading on the RSI. So I think we are heading towards another bounce. But like I said, this is a bit of a contradiction because our basic technical analysis is telling us that we could expect price to break down quite violently potentially from here, with moving averages rolling over. We're below major moving averages. We've just taken out a lower low. Well, we've just made a lower low. All of that is quite bearish. But the count suggests that yes, we might move down a little bit lower, but then it could complete a long sideways double combination correction, and then we'd come out of here in a hurry. Like boom. You know? So we've just got to keep an eye on it now, guys. If we've gone through this low. Okay, the low at 1765.08. Now that low is the low of the A in the Y wave, right? So the C should set a lower low than the A, the C of the Y, and it has done. So technically we've done enough. We've technically done enough to complete this double combination, but we could come lower towards that target. So we really have got to keep an eye on. If you're interested in catching what could be a major pivot, you've really got to consider now, if you want to be bullish, and this is not financial trading advice, read the disclaimer, but I started from today. I will start to build a long position here, and my stop, because I can't be sure at the moment, I've got this target, that's fine, but my stop's going to have to really be the invalidation point of the primary one. I can add to it if we come down a bit lower, but I'm willing to take this trade at the moment. I know that may sound a bit crazy, well, not crazy, but a little, you know, it's not a perfect setup, because we've got all of these contradictions between the basic technical analysis and the Elliott wave analysis, but I'm trusting the count more, and if I see us come down into this target zone and bounce, that will make me more bullish, and then it's only going to be a small position, and then I can think about doubling down on it once we get across this line. Confidence above this level, I've been saying that for months. Once we take out this WX pivot, and we see a 5-wave structure coming out of here, like I said, we could come out of here in a hurry. You know, once we start seeing something like this coming out, and we get above this level, yeah, I'd be getting in big time. Because I think at that point we've got one last run up. This is the 3-4 complete. We're going to run up in a 5. So that would be my assessment. I'll just give you a quick rundown of. Actually, you know what? I really don't need to deconstruct it. We'll just spend a quick few minutes on it. So essentially, here we are on this 2-hour time frame, just so you can get a closer look. So let's just bring up our major wave count, major wave again, which we're looking at for the WXY. What threw me was I wanted to complete it here, right? Because then we get that beautiful channeling, point to point to point. Okay, and then I was quite happy with that, but we didn't get near that 100% parity. Now I wasn't too worried about that, because when I was counting this as the W, then we've taken out this low, right? We're still counting this as the W, right? We've taken out this low, and I had an ABC in here taking out a lower low on the channel, so I was happy with that. But if you remember, I don't know if you saw the video, you can go back and watch it. I was trying to force an impulse wave in here with a screwed up funky triangle in the 3 here, and it was ugly as sin. I remember saying at the time it was ugly as sin. That had me backing the bearish count more because it was cleaner, a series of 1-2s down. I'm now back in the bullish camp, at least until we see this level back at 1689 get taken out. While this channel holds, while this Elliott wave count holds, and now that we've moved the Y position from here to here, and our WXY here, it makes much more sense. There's another double combination, ABC, 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 5 legs in the C here, in the C of the B, and then another zigzag down into the C of the Y to complete our wave 4. That looks better to me now. I'm much happier with that. It's just technically much prettier from an Elliott wave perspective. So that's it, guys. That's what I think is going to happen. I think we need to keep an eye on this target box down here. It's totally up to you, the kind of risk you want to take, obviously. At the end of the day, you know, I'm running my own little company, and I'm trading my own money, so I'm not risking anybody else's shirt on something like this, and I'm still going to be pretty tight about it. So, but I want to start accumulating now. We've been going through a long sideways correction in gold. It hasn't crashed, it hasn't broken down. If it does, we'll get confirmation quite soon with this level here, and we will break down out of this channel, take out this level, then we can look to the bearish count. But if you're going to be bullish, we've been correcting for a significant amount of time. So for me, at the moment, if it's choosing to be bullish, I'm going to start accumulating from here. So that's it, guys. That's gold. If you're new to the channel, I hope you like what you're seeing. If you have, please subscribe to the channel, smash the like button, and let me know what you think in the comment section below if you're interested, and always feel free to share any of my videos. Now, I should be back with you shortly. I need to get a video out on oil as well. So until then, take care of yourselves, guys, and I'll be back with you shortly. All the best. Bye bye.